Thank you for being on time. I appreciate it. Got a couple other slaggers that are just about to run in, but I'm not sure where everybody else is. Morning, gentlemen. He's walking in, and then when he comes in, we'll begin. Morning. Morning. So guys, what I want to work on this morning is I want to go through the business plan structure, and I want to make sure that we're all in agreement as to how your business plan actually lays out, and spend particular time talking about how the financial section of that plan lays out. That's probably the most counterintuitive section of the plan for you, I'm going to guess at this point. And it's probably, arguably, it may even be the longest section of the plan, okay? In terms of just raw number of pages. So I want to work on that, but I also want to see if there's anything else that you're dealing with, working on, that we need to help with, or that we need to do any follow-up on or fine-tuning on. Anything assignment-wise that you've got that is giving any struggles for you? Or is everything assignment-wise already turned in? Okay, I kind of thought so. I just wasn't 100% sure. Okay. Do any of you in this class, are you responsible for Isha? So let's talk for a few minutes when we're done. I just want to make sure that if you need more help, you get it. And if you don't need more help, you don't need it. Okay, all right. Any particular client struggles that you're having that we need to address? Okay. Okay. Well, let's just jump into the plan. All right. So you'll notice in Canvas that you have as some of your different research or resources under quick sheets, guides, and calculators, you got this business plan, content, and structure. And that's going to form some of what we would expect the plan to flow like. But some of these things are put in front of you as though they're completely separated items. And I'm going to suggest that you don't need to have a separate section for each and every one of these things. There might be a few of them that you don't even have sections for at all, or maybe you don't even include them in a section because maybe for the company that you're dealing with, it may not be relevant, or it may be that you combine 2 or 3 of them in a given section. So I want to go through and just look at this document briefly, and then I want to go to the whiteboard, the digital whiteboard, and I want to page by page outline what you're doing in each of the sections of the plan. Okay. And I'm not going to give a whole bunch of written bullet points. We'll talk through a lot of these things, but ask questions if you are not completely confident on what I'm expecting to see in that section of the plan. All right. Okay. So as we look at the document, let me find it here. That one. So this document starts, and it gives you some information about what should be in the narrative, plan outline, executive summary, and business description. I'm going to tell you that you can have those as completely separate elements of your plan, or in what I would think of as your executive summary, you can discuss all of these things. If it were me, given the scope and the substance of what you're expected to do, I would most likely combine all of these elements in just a very robust executive summary. Let's talk about what the executive summary should be like. And I'm going to try to connect it or liken it to something with which you're already very familiar, more so than you are familiar with a business plan. Parker, have you ever written an essay?
Yes.
Good grief, right? I mean, you can't even count them. Okay. What's the first section in an essay? An intro. What should be included in an intro, or what's a really simple way of describing the intro? So
An overview of what the essay will be about.
Yeah, in fact, an even simpler way of putting that, we tell the reader what we're going to tell them, right? We tell them we're gonna walk through this, we're gonna consider that, and you give them a hint as to some of the conclusions, right? You give them some little snippets of the conclusion, you give little snippets of what they're gonna see in the body of the essay, so that they understand the journey that they're about to go on with you, and where it's a little bit about where it's gonna wind up. And then you walk through the various paragraphs or pages that is the body of the essay. Okay, and in this case, we've got those nicely articulated, and we'll work through those in a few minutes. And then you wrap it up with a conclusion. So in the intro, we tell the reader what we're going to tell them. In the body of the essay, we tell them. And in the conclusion, we tell them what we told them. That's an essay, right? Well, a business plan is simply an essay on and about the company that has some particular elements and a particular structure. And I would say that this summary item that we're dealing with, think of it as the intro. An intro in some of the earliest essays that you wrote was probably a couple of sentences long, right? Maybe it was a paragraph. And then at a point you realize the intro itself could be a very robust part of your essay. It could go on literally for pages. I wrote an introduction to what was intended to be an article at one point, and my introduction was 15 pages. Now the article was 360 pages, so it got a little carried away. I wouldn't recommend that, by the way. Okay, it was called a dissertation by the time I was done. But an intro isn't simply a couple of sentences or maybe even a paragraph. And in your case, it for sure, when you're introducing this business to readers, whoever the readers are, maybe it's some of the employees of the company, maybe it's the owners that you've been working with, right? Maybe it's bankers, maybe it's whomever. When you're introducing it, we're going to call that an executive summary. In that executive summary, we're going to give the story of the business, the full narrative of how this business began, what the structure of the business is, what they produce, where they're going. We're going to give a really robust overview. One of you use that term, really robust overview of all the things we've learned about that business. We're not going to go into a tremendous amount of detail on most of these things. Well, you might go into some pretty good detail about their products and services. You might go into some pretty good detail about their location, maybe about the business structure, LLC, C Corp, whatever it happens to be, because this needs to be robust. And in fact, you can go through and accomplish the narrative section element here, the plan outline, the executive summary, and the business description all within your executive summary. Or if you really want to, you can separate these out and call them different sections. This is up to you. There isn't a right or a wrong in this. It's up to you. It's up to how you best organize this so that you can get to the body of this and the conclusions you're trying to represent. Any question about that? When did you begin to gather information that will now inform this summary section, this big intro section? You gathered information about it, right? When did you start that? Yeah, with that first preliminary research assignment where you went online and you Googled them to death, right? Or whatever it was you used. Okay. And every time you've had a conversation with the owner, every time you exchange an email with the owner, when you did some of the quantitative research and cash flow modeling for this, or when you will do it rather, because I don't think most of you have started that or done a lot with it yet, when you reviewed their financials, when you went through and read some of the material given to you by the SBDC, when you did your own market research. Mo's doing some right now, is paying attention to the market. We do this through the full absorption of the entire experience we have with the client, right? Okay. I should be able to, or anyone should be able to read your summary and get a very good idea about this company, what it does, where it does it, how it does it, what its challenges in doing it, what its good parts of doing it, and what its financial outcomes of doing it are like. Now, maybe not all the jots and tittles, right? That's what the rest of the body is for, and the conclusion. But you should be able to think of the introduction, the summary, as a standalone piece from start to finish, tells us a complete story, maybe with limited detail. Fair enough? My guess is in your plans, This is several pages at least. That's my guess. And by the way, when I say pages, to me, you're gonna decide whether you actually create a plan and and your final document that is a double spaced 12-point, whatever font, or single spaced 11-point. This is up to you. We're not looking at APA style research papers here. Okay. Frankly, I don't like double spaced. When it's a business document, it takes way too many pages, if you will. But sometimes single space gets a little bit dense. So I tend to go 1.2. Okay, that's just me. If you do a one space or one space, one line, I have no problem with that. If you go above 12-point font, then I think you're just trying to take up space on a page. You go below 10-point font, give me a pair of reading glasses I can use when I'm reading it. So you got 10, 11, 12, it's your call. And that's going to be somewhat related to the font that you're going to find that the fonts that don't have serifs are easier to read. What do I mean by serif? Let me show you what a serif is. Some of you use fonts that have them. I don't like them. Just because they're harder to read. So to me, whoops. And to most of the Western world, that is a T, right? But to Times Roman, and I didn't represent the serifs very well, okay? That's a T, okay? With a little bit of detail for style. Arial, Calibri, Aptos, very clear. Tahoma, sometimes very clear and very plain. Times Roman and many others like this. But it's completely up to you, as long as it's a readable font. Okay, I'm not giving you style guideline here for this kind of thing. If you ask me, I'll tell you what I think, but it's completely up to you. Now, if you start to use some whiz-bang Shazam stylized thing that I'm going to look at and think, wow, is it a foreign language? Then please stop. Okay? Keep going. So these first 4 items, narrative and the first 3 numbered ones, can be one element of your plan. The operations and management plan, frankly, I think that's 2 elements of your plan. I'm going to ask you to create a separate management section from your operations section. And again, we're going to go through in a few minutes. I'm going to go page by page on the whiteboard here and walk through some of this for you. But I think the operations section and the management section are separate. And we'll go through with some detail here in a few minutes what I think belongs in each of those. Market analysis, competitive analysis, sales and marketing plan. That's a section. This is where you're going to bring in all of this qualitative research from the SBDC, you going to the various libraries, you going to the online repositories, pulling up SIC and AICS, all of this kind of stuff. That's going to be an entire section of its own. Oh, it may well be many paragraphs. It may even be many pages, but I think it's a section. We go down here and number 8's an operating plan. Well, I kind of conflated that a moment ago. Oh, excuse me. I read this first one. I read this as operating and management rather than ownership and management. I'm sorry. Ownership and management is a section. Okay. You're talking about who owns it and who's managing it. And we'll go into detail about what you'll represent there. Marketing is another section, sales and marketing, which includes competitive analysis, all of that. Operating plan is its own section. And then the financial plan is its own section. Okay. So this guide sits there for you. You can expand it. You can combine it. Don't make it less than the summary, the management, the operation, sales and marketing, and finance. Those sections must be there, or financial. Those sections must be there. Any questions? Okay, so let's start to walk through them. call this executive summary, or you can just call it summary, or if you want to, you can call it introduction. It's got to be there. But as it turns out, it's not the first thing that's going to be there. There's something that's going to be ahead of it. So let me try to do this. Try and move this. Oh, not gonna let me. So I'm gonna do it differently. Excuse me. The first thing that we should see is a title page. That title page should include the company's logo, the company's name, the date that you are completing this. It should include your name or names in this case. It should include Gore Consulting. Those are what should be on the title page. Okay, it's a page. And the company's logo should be the prominent item. The company's logo and name should be the prominent item. The next page is a table of contents. Which is simply a well-formatted table of contents that has at least called out the page number for every major section. And I will tell you, it's a good idea to call out the page numbers for the minor sections as well. You're going to decide exactly how you organize this, right? You're going to have headings and subheadings. And are there any of you that don't know how to use the table of contents function in Word? Everybody comfortable with the table of contents function in Word and how to construct it in Word? Okay, so in Word, you are allowed to create, in fact, let me bring up a Word document real quick and just show you something super fast. Well, I'll try to make it super fast. Oh. I appreciate you admitting not knowing, because you're the only ones willing to admit, but there were at least 3 other people that don't know either. Okay, you see up here, oh, not right, not yet, you don't. You see up here where you've got these different types of sections, and then it's not really called out very well that they're sections. This is called normal, this is heading 1, heading 2, title. If you put something in as a heading, it dictates the font, the spacing and such for that line, but also the table of contents function will go out and recognize it, so that when you insert a table of contents, it will identify something that has heading 1 as a major section. It'll identify something that has heading 2 as a subordinate or minor section to the preceding major section. And it will call them out and it'll tell you the page numbers for each of them. So go through that, find the 1,000 different YouTube videos out there that show you how to do this and understand how to do it. Somebody on the 2 or 3 of you working together in your team probably knows. Okay, so it should be a well-formatted, fully constructed table of contents. After the table of contents, now we're going to start with the summary or executive summary. And again, this should have in it the narrative, maybe a description of the company. It's going to tell the story of the company as a narrative. It's going to give us a clue as to where we're going, what sections are going to be represented, and the kinds of things that are going to be in those sections. It's going to give us a clue as to what's going to be found in the financial plan, in the marketing plan, in the operations, in the management. Those 4 items and the summary are the 5 required items. You can have more, don't have less. Completely up to you. Okay. This is a page. Title page is a page. The table of contents is a page. My guess is in most cases, this is certainly at least 4, maybe 5, 6, or 7 pages, Depends on how elaborate you get, how much background you've got. And by the way, by the time you get to the summary, you should begin to use some visual elements. You either have available to you online, or if you've gone out to these businesses, probably some photographs of these businesses, maybe the brick and mortar location, maybe something happening inside, maybe something about their products. Start to place some pictures in here. Not great big ones that fill up the page. Create some visual interest. People at some point should be expected to read this. If nobody else, me, right? So keep me interested. Keep me awake, if you will. I'm going to be reading between this class, the other class, and my Finance 495 class. I'll have at the end of the semester when when I'm reading these things after you guys have submitted everything, I'll have 40 or so of these. Keep me interested as well, if nobody else. Okay, give some visual interest. So these are the first three elements we're going to find. The next element I want to see here is I want to see a page about the management. This might also include ownership, right? In fact, in most cases, it's going to be primarily ownership. This should include an org chart of some kind. It should include a photo for each of the major owners, their LinkedIn URL. By the way, the photo should be linked to their LinkedIn URL. Their name, of course, is going to be here. Their title. And it should include some abbreviated, some relatively short bio. Where are you going to get the photo in the bio? What do you think? You can find it through the website. Almost all of these people are users of LinkedIn. And if you haven't already been to these owners' various LinkedIn sites and connected with them, do that today. But they're going to give you lots of information there, right? In fact, almost always you're going to find their photos. You're going to find a little bit of a bio. If it's not there, maybe it's on their website. And if it's not in any of these, ask them for it. In fact, part of what's happening today, or part of what should be happening today, is that you should be thinking about, oh, I don't know this yet. I need to ask this. I haven't come across that information yet. I need to find this. You've got 7 weeks, I think, including this week, right? How many of you are seniors? Okay, so gut check. You are 7 weeks away from finishing your undergraduate career. For some of you, you're saying, yippee. And others of you that strikes fear and terror because you don't know what happens next, right? I remember acutely what it felt like to come out of spring break, or actually it was fall break for me, out of the break before in the summer or the semester in which I was completing. And it struck fear and trembling for me. I had a wife and a child at the time, and I didn't have a job lined up. I was working on it, but I didn't have one yet. 7 weeks. Okay. Good for you, by the way. Good for you. 7 weeks. You should be connected to these people on LinkedIn. You should have this information about the owners you're dealing with. If they have given you the names and functions of other key employees, which I've asked you to gather from them, then you may be able to find these for them as well. You should go to the extent of, if you haven't come across this information, if you haven't gathered it yet, now you know what some of the sum and substance of your next voice-to-voice, Zoom, whatever it is, contact's going to be with this owner. You should be making your list, because there's a lot of stuff I'm thinking that maybe you don't have yet that we're now starting to uncover. Okay? The org chart, and then just list this. And the management. You can do a couple of paragraphs or a paragraph describing the management structure. And this is probably a good place to reiterate the business structure as well, because the business structure, S Corp, partnership, LLC, whatever it happens to be, is going to dictate a lot of this, right? Okay, so that's the next item. Sales and marketing. And this is one of those kinds of sections that might be mini sections, or it might be a big section and lots of subsections. I think here we've got to talk about the company's products and services. We've got to talk about their pricing strategy. How do they set their prices? Let's talk about that for a minute. There are three basic ways that companies set prices. What might they be? You can just start guessing, and we're going to start ticking the three off pretty fast. Yeah, so then we look and we say, okay, I sell apples. What do apples cost in the marketplace? If I charge more for my apple than the marketplace charges, there's a pretty good chance that I'm not going to sell as many apples as I need to. Or I better convince the marketplace that it's a better apple, right? So that's looking at the competition. That's one. What's another one? What do you think, Luke? What might be another pricing strategy? How about markup? So I know that to create an apple, apple probably not a good example, is to bake a cookie. I know I've got some input costs, right? Maybe I've got 15 cents in flour and sugar and butter and eggs and other things in my cookie, chocolate chips. I've got maybe 25 cents of labor. I've got some overhead I've got to account for. And so I'm going to add all those up, and I want to then account for some profit margin and my markup, and that dictates how much I might sell my cookie for. And you might say, well, wait a minute, what if that prices you above the market? Well, that may be fine if it's a much better cookie with much better quality inputs, right? Or much more creative. I came across a woman in our Banking on Women program that we administer here for Synchrony Bank, and she charges $4.50 for a cookie. I think of a cookie as an Oreo, all right? Or a vanilla wafer. That's how boring I am. And I wouldn't pay $4.50 for an Oreo or a vanilla wafer. But if you saw her cookie, you'd pay $4.50 for a cookie because they're works of art. I mean, they're these highly glazed things with very fine artistic details in them. I don't know what they taste like because I would never bite into one after I paid $4.50 for this thing that's very artistic. And by the time I finished looking at it, it'd be too stale for me to want to eat it, right? Keep it, I'm also afraid of things. But they're beautiful. Well, it's a different kind of cookie. It's not going to be in the same category as an Oreo. So she can charge an awful lot more than you might charge for a chocolate chip cookie, right? So markup is one of the strategies. And then there's another strategy that may not be at all intuitive for you. So Simon, you have created the Akina. It's a thing, right? You've given it your name. And there is no other thing on the market exactly like, is it Akina or Akina? Okay. Cool. Sorry about that. At least I know how to spell it, all right? So there's no other thing in the market exactly like the Akina. It is unique. What power for pricing does Simon have on a unique product? What do we call a unique product? Monopoly. Exactly. Well, we know enough, having taken our microeconomics courses, that you can't simply charge whatever you want for a product on which you have a monopoly. You'll remember the marginal cost curve and marginal revenue curve. And if you don't remember them well, I'd be glad to talk to you about them for several days because as an economist, I dig them. But so you really want to remember these things rather than have to go through my diatribe, right? And you know that where marginal cost and marginal revenue cross, we can bring that down to the quantity line. That dictates the quantity. We take that then up and over to the consumer demand curve, and that dictates what the consumer is willing to pay for it based upon the consumer demand. Okay, that's how we price a monopoly. So you can think about, do you have something that is a pure monopoly product, like the Akina, or something which there are not a lot of competing products, so it's got some monopoly power. So we might think of monopoly pricing. Those are the three basic strategies, and you can discuss which one the company appears to be using, which one you've seen it play here. This is where we're now going to bring into issues the sales and marketing activities and plans of the company. Are you responsible to tell these business owners how they should be marketing and selling their products? No. You are responsible to articulate for them what they have told you about how they are selling and marketing their products. And maybe they've given you some documentation, maybe they've just talked you through things. Hopefully you've asked enough questions. If you haven't, make a note so that you do ask enough questions, right? You're responsible to articulate this back. This is where you're now going to think about the competitive landscape. And all those things that you've gathered from the SBDC, SIC code, NAICS code. In fact, you should absolutely hear when you're talking about their products, not only name the products, you should identify the SIC and NAICS codes in which they exist. You should then bring into bear all this gobbledygook of stuff that you've been compiling and that you haven't had to do anything with really until now. And now it's time to start to put that together. In fact, you've got an assignment called the qualitative element assignment that has you go through and structure all of this, in fact, effectively structure the entirety of the plan, business plan, except for the financial part. Because you're nearing the point where you're ready to do that. Okay. In fact, you probably just are a couple of conversations away from being prepared to do that. Oh, you may go back after you finish the financial plan and insert some elements from the financials into these. For example, the intro summary should have some financial elements. Does it make sense that there might be some financial elements in the marketing plan? The prices, pricing strategy, revenue. This is all relevant to this, right? Okay, so you're going to take elements, put them into these other sections, just like you're utilizing concepts or patterns developed in these other sections, and you've been utilizing them to inform the financial part of the plan, the cash flow model, the assumptions that we're going to have to make. This could easily be 10 and 15 pages, especially with some visual representation from some of those items you've been gathering. The website should be here. If they've got social media, it should be here. How they sell and market their products should be here. Any questions? Okay. That then takes us to the next section or pages, which is the operations plan. Once again, you're not responsible to tell them how they should form and structure their operation. You are responsible to articulate how they have formed and structured their operation. Now, each of these, by the way, may include a reflection on what they have done and how they are currently structured, what their current marketing is, what their current management is, what their current operation is. But it's probably also going to include commentary with respect to what it's going to be as they execute against their growth. If you're going to tell us in the financial part of the plan that they're going to have 10% growth for each of the next 3 years, then some of these elements that we're talking about now should include the roadmap as to how they expect to accomplish this. This is not just reporting on their history. It's including the roadmap, the plan as to where they are, how they're going to accomplish what they've said they're going to accomplish. Okay. What else belongs in the operations part of the plan? Channel your inner Elise Morton, if you can. How many of you have taken class from Elise? Oh, really? Oh, okay. Wow. Okay. Well, lucky you and bummer for the rest of you. Elise is one of the smartest people in the building, without question, right? In fact, she's got a PhD in something, but it may as well be a PhD in Excel. She knows Excel better than anybody I have ever met. She's also a crack at operations and ops management, okay, and organization. So you're going to channel your inner Elise Morton, and the rest of you are going to do the same thing. You just don't know who it is. Okay. Describe how they operate. You can do this graphically with some paragraphs of comments. You can do it qualitatively without a graphic. Completely up to you. I would show some pictures here. Okay. I would become as detailed as to the flow and structure of this operation as I can. They have sold products to their customers as discussed in the sales and marketing plan. They order from a manufacturer in Malaysia. The order process includes a 50% deposit, after which is a 6-week manufacturing time and a 4-week transit time as the container goes across the ocean. They then deliver to the client either on a special order basis, or maybe they keep things in inventory. They distribute like this, they sell like that, they deliver like the other. They describe it, walk us through it, help us understand how this company operates. They've got a CFO, they've got sales management, etc. Now you might be thinking, well, Rick, we talked about some of that in the management plan, we talked about some of that in the marketing plan. Yeah, you did. The operating plan, the operations plan is going to be an echo of and reflective of most of the other things we've dealt with. Because it tells how they do all these things. Okay? Any questions here? Okay, so I can't tell if it's because it's 8:30 in the morning or you are just bored to tears already at 8:30 in the morning. No, I still can't tell. Great. Okay. You guys aren't helping me at all. Okay, so let's go on to the next part, and it's the financial part of the plan. And I'm going to kind of gloss over this for a minute, and then I'm going to come back in great detail. Yeah. Great question. I don't know. In fact, you might remember I haven't given you a hard, fast number of pages for this whole thing, have I? I've given you some hints as to how many pages I think is minimums and that kind of thing. So I don't know. Certainly, at least 1, maybe 2, but some of these could go on for many, please. Yeah, great question. So remember, you've got some consultations coming up with me, right? And as we go through those consultations, the first thing I'm going to ask you is where you are, how are you doing, what questions do you have, how can I help? The first of those is relatively generic and it's kind of up to you, okay? The next of them, I'm actually having you bring the financial elements. You will have already submitted the qualitative elements as an assignment, and you'll get some commentary back on the qualitative elements well in advance of putting the rest of it together, right? That's not exactly like submitting a draft of the whole thing, but it's a draft of big parts of the thing, right? And I know when you submit that, if they're not complete yet, because until you've done the financials, you haven't had some of the interesting little details you're going to put back into those sections. But it's kind of that. The last consultation that we'll have together, you will actually walk me through your completed draft. And I'll say, great here, let's revise this, improve that, spelled these wrong. I tend to pick up on nitpicky little things. You think, come on, look at the big picture, Rick. Well, I'm also trying to look at the big picture, but I get fixated on something that's not structured right. And I will ask you to correct it. And then that's the last time I'll see it. I mean, unless there are things we say, hey, you know, you really need some help on this, go back, revise this, bring it back to me. But that's probably the last time I'll see it. You will then submit it by the due date and time to Canvas as a PDF, as a Word document, and the spreadsheet that backs up all of the financials. Okay, so you're going to submit 3 items to me in Canvas. To the client, you will submit 1 item and 1 item only, and that is the PDF. Do not give the client a live Word document that they can edit. And do not give the client your spreadsheets. Okay. Why don't I want you to give the client a live Word document? Because they can edit it. It's got your name on it. It's got our name on it. They can edit it. And I'm not suggesting they're going to nefariously do so. They might think, oh, I want to correct this a little bit. I want to adjust this. And all of a sudden, it's enough different that some of the outcomes should be different as well, but they forgot to deal with the outcomes differences. And now we've got something out there with your name on it that's not how you present it. So we give them a PDF. Now, we all know that if you've got a paid subscription of Adobe, you can convert any PDF into a Word document. So it's not foolproof, but we just don't want to make it too easy. I've literally had people do this kind of thing, not meaning to do something ill-conceived or ill-intended, but this turned out to be a mess, and so you just don't want to do that. And that's, by the way, not just an issue for our class, that's an issue for your business life. Okay? Why don't I want them to have the spreadsheet? Similarly, there are elements of your cash flow projection spreadsheets that if they change, they type a number into something, like one of the cells that should have an equation, all of a sudden, and they may not even notice it, you may end up out of balance on the balance sheets. That's our check digit, right? Okay. And so they may type a number in some place or a couple of places and, oh, well, it's not really that, it's this. And all of a sudden it changes things. They don't even recognize things. They don't understand the change. And so we don't want to set that up. We're good? And while we're talking about that, when you submit that to the client, one of you on the team will send an email to the client on behalf of each of you on the team, thanking them for having worked with them, giving them their plan, and giving them the opportunity to either have you set up a meeting with them, or have them set up a meeting with you where you can walk them through this plan, or B, set up a Zoom. When I say meeting, I mean face-to-face meeting, okay? Or a Zoom where you can walk them through the plan, or if they would like, they can simply review the plan and then send you some questions by email if they have it. Now, you're going to do this at the end of the semester, and some of you are getting out of Dodge the next day, right? Some of you are graduating a week or so after that, and you're thinking, Rick, I am not going to go back in sometime in June and have a meeting with this client face to face. I'm going to be in Pocatello, or I'm going to be in Rhode Island, or I'm going to be in Sweden. That didn't happen. I could ask you to offer those options to them with great confidence. Because out of the hundreds of these I've now walked students through over the last several years, 0 clients, 0 have chosen anything but receive the document by email, and if they have questions, they'll ask you those by email. No one has ever accepted the opportunity for a face-to-face or even a Zoom. And so you can offer it without much risk of it being accepted. All right. But if we don't offer that, sure as anything, somebody's going to say, well, gosh, I really wish you'd walk me through this. Right. Okay. So that's so offer it, but don't feel like you're risking something. We then, after the financial section, and again, we're going to come back to the financial section in a few minutes, we're going to provide a conclusion. And let's talk about what a conclusion should look like. In the essays that you write, what do conclusions look like? Well, Mo, what's a conclusion like in an essay that you've written? Is it a big, substantial part of your essay? Is it just a little wrap up? What is it like?
It's kind of the middle, but it should be like what you talked about.
Okay. Completely agree. Again, you're telling them what you told them, right? But there's something you do in the conclusion, and in this case, there's yet an additional item you're going to do in the conclusion that are not necessarily obvious to us when we're getting into these. In your conclusion, you draw together a lot of the connective tissue. You're going to talk about marketing, you're going to talk about operating, you're going to talk about all these things, as those are completely separated items, right? In the conclusion, you're now bringing together the connective tissues. Honestly, I think the conclusion is where we impress people. We make references, we interpret things, we create outcomes. We say, okay, I said that you end up with $5 million in cash. Here's what it means. Well, I should know what $5 million in cash means, but does it mean distribute out to equity stakeholders? Does it mean to reinvest in the business? Does it mean to buy another bit? What does it mean? Okay, so the conclusion is a big dang deal. Some of you have had my Art of Adulting class. In my Art of Adulting class, I tell you that the conclusion should be at least 10, more likely 20% of the length of the document itself. This is where you don't wimp out. Now, I say that. I know very well that many essays that you've written, by the time you get to the conclusion, you're sick and tired of the thing, right? You're ready for it to be over, or you begin at 11 p.m. It's already 11:58 p.m. and it's due at 11:59 p.m. Renee's smiling. She knows exactly what I'm talking about. Don't do that. The conclusion is, from my way of thinking in an essay, the single most important part of the essay. Okay. In this case, conclusion includes something else. See, as we've gone through the introduction, as we've gone through all these sections, you're not giving your opinions. You're not telling them what you think. You are reporting to them on what they look like, where they've been, and where it appears they're going based upon what they've told you and all the numbers. And by the time you get to that conclusion, some of you are aching and itching to give them your opinion. Like, what were you thinking when you did this? Not you, them, right? And you're going to say it different because you're not going to open us up to people complaining, right? But this is where you give some of your opinion. You may feel that you're not as knowledgeable as they are. And to be sure, you're not as knowledgeable about their business as they are. You may feel like you're not as knowledgeable as you're going to be in 5 and 10 years, and to be sure, you're not. But you're not ignorant at this point. You're not totally without experience. You're not totally without perspective or context. Take advantage of that, and without being caustic or too flowery, offer some of your opinion. This is your chance. It's your parting shot. How they hit home. Okay? And then beyond that, we've got our various appendices. I would tell you that a tremendous amount of what you have gathered from their financials, including the original financial documents they sent you, what you've gathered from the SBDC, web searches, etc., an awful lot of this should be organized well and put into various appendices. And when you put it in the appendices, you then get to reference to it in the body of the items. The appendix alone, appendices alone, could easily be 40 or 50 pages. You don't have to create any of these. You already have this stuff. Put it there so when you're talking about something, you can easily reference, and it's obvious what you're talking about, what the context was. If they want to look more deeply, they can look more deeply at something. They probably won't, right? But you need to get used to that. You need to get used to preparing documents that can stand alone, and people don't have to go and start figuring out, where did you come up with these things? You put all this stuff in the appendix. Okay. All right. I want to move into the financial part of the plan because this takes an awful lot of discussion here. I need to bring up on my screen another item real quick, so give me just a moment. Okay. So in the financial part of the plan, which very well may be the single largest, longest part, potentially the marketing section could be longer, but this might be the longest. We're going to start with a narrative. I'm going to use that term a number of times as I go throughout this, but the narrative is you're going to tell the story of what we were given by the clients with respect to their financials. You're going to talk about, we were given these years' income statements and these years' balance sheets. They came to us as PDFs, they came to us as Excel spreadsheets, whatever they came to us. We then took them and organized them into Excel spreadsheets. We then went ahead and collapsed their categories so that we could represent them in an efficient way. When I say collapse their categories, what do I mean? I've already begun to do some of this. What do I mean? So Quo, you get an income statement, it's got 175 lines of operating expenses, 23 lines of cost of goods sold, and 17 lines of revenue. Another 15 lines of non-OpEx. Now, I may be overstating a little bit, but if you think about many complex income statements, you'll see that might be an understatement, okay? You know that to project their cash flows, you've got to have an assumption for each and every line on the income statement or balance sheet that is not a subtotal, right? Do you really want to have to come up with, I'll count that up to about 200 different assumptions? Not a chance. So we're going to take that 147 or whatever lines up from the OpEx, and we're going to collapse it into 6, 7, maybe 8 categories. And we're going to put the like items together. There could be 12 lines of various types of employee expenses. I want to see it as one, right? So you're going to collapse those. So we have to discuss for them what we did. You will have in the appendix the items they gave you so that you can have them reference them. You don't need to go back and reference line by line them, but if they want to see them, they can reference them. And then I want you to take and literally do a snip or a screenshot of the historical financial statements. The balance sheets and the income statements. And where I want you to get those is your financial model. I've got open for you the curated by Lauren here. And if this was our client, then I would literally take this and I would go to my snippet, which I don't see on this particular screen, and I would select the part of this that is the entirety of the balance sheet, and I would literally copy and paste that as an image, not as a spreadsheet, but as an image into some pages of this document. I would show it for the various years, of course, but I would do it as one item. I wouldn't show a separate balance sheet for each. You're going to collapse these into like categories, and you're going to put them into a structure very similar to what you've seen in the curated assignments. You're going to then do the exact same thing with the income statements. So here you give the narrative of what we got and what we did with it that resulted in these things, and then we show them that picture. Literally, screen capture, snip, whatever you have to do, that item. I don't want you to go ahead and copy it and paste it in as the cell structured spreadsheet, because there's a really good chance it's not going to come in nice and neat and clean. It's going to, the columns are going to be screwed up, different things, it's going to double space things. It's just going to be a mess, right? When you do this, to get the best resolution into your finished document, have the image on your screen be as large as it possibly can be. Then you snip and paste it in as an image, and you probably are making it smaller at that point, right? But if you start big and make it smaller, then you keep really nice resolution, detail. If you start small and make it bigger, you lose a lot of resolution. Okay, you probably already know these things. So I apologize for telling you things you know, but I struggle with these very often when I see the outcomes. Okay, so the narrative of what we got and what we did with them, and then a picture of what we got. Then we're going to go through a narrative. But this narrative now is the story of having reviewed and analyzed these balance sheets and income statements. Notice I didn't include cash flow statement in this. Okay, if they gave you a cash flow statement, cool, great. I don't know that any of them did, but you're going to ignore those in this element. You might include them in the appendix if they gave it to you. But you're now going to tell the story of, in analyzing these, we identified certain patterns of change within these expense types, or with this revenue, or with this cost of goods sold, or with this balance sheet item. We identified that it appears to be that accounts receivable is relatively consistent at 10% of their revenue. Their accounts payable might be 7% of the cost of goods sold. Whatever these patterns are that are now helping us forecast and helping us make assumptions, And to those patterns we recognized, we spoke to the owners and identified that they believe they're gonna have 7% increase in revenue next year, 15% the year after, blah, blah, blah. We now are giving the story of how we came up with the assumption. Some of them from patterns we identified from the documents, some of them from asking questions of the clients, some of them from recognizing trends in the marketplace. And if you're sitting here thinking, well, I'm not sure what the sales are expected to be like for the next 5 years for the clients, then you just have to start asking those questions. Hopefully that's a question you've already asked, but you've got to start asking those questions because we need to make those assumptions. You know, by having done the various cash flow modeling assignments so far, what the assumptions are, the basic assumptions, or what categories they fit within. You've got to find answers for your client for those assumptive categories. So literally, you create the narrative of the assumptions, and then we go ahead and go to the assumptions table. And you literally are going to screenshot it. Notice that when I'm doing this, that I've been hiding columns that are not relevant to what we're talking about. So and the one before I hid the projected future columns because we were discussing the historical. Here in the assumptions table, I hid the columns from the past because we're making assumptions about the future. Okay, so do that rather than leave this either superfluous information that's not relevant or blank space. Okay, and then you're going to literally take this and copy it, paste it in, snip it, paste it in. Notice that I have utilized a particular organization in my assumptions section. I start with income statement assumptions, I move to balance sheet assumptions, and then sometimes I've got a cash flow statement assumption, which is simply going to be distributions. Okay. I could have just as easily started with balance sheet assumptions and gone to income statement and then distributions or whatever, right? It doesn't matter what the order of this is. It matters that they are that they're categorized together, that they flow and it makes sense. And it also matters that you represent things in this document in like order. So if you're giving the income statement first in the historical documents, then you should have the assumptions first, and you should have income statements first in the projected documents. If you're starting with the balance sheet first in the historical documents, then your balance sheet information should be first, and so on. So just keep it consistent. That's a mark of professionalism and quality, by the way. Okay, just keep it consistent. But again, here you're just going to copy and paste this in. And in each case, both with the historical documents and particularly with the assumptions, you're not going to simply tell a little bit of a story and then go ahead and give this visual representation. That story should be pointing to particular elements in the visual representation, but not all of the elements. You might make a comment about 5 or 6 of the different assumptions that you've made that you think are particular standouts. This certainly, without question, should include your assumptions on revenue, cost of goods sold, and at least a few of your assumptions on OpEx and distribution. Okay, but don't talk about each and every assumption for each and every year. That's too much. You give them enough so that they can understand where you're going and what you're representing here, and enough so that now when they look at the assumptions table, they know what it's doing. They know its importance to the rest of this. Are we good? Any questions about this? Okay. So, this comes as a shock to you. The next thing we do is provide a narrative. Where do we go after we've had the historical documents and the assumptions? What can we now do next? Projections. So our narrative now becomes, we use these historical documents as our platform, our foundation. Maybe it's operating off of year-end 2024, whatever it is. We applied to that these assumptions as shown in the prior section. And from these, we then were able to project the income statement and the balance sheets for years A, B, C, D, and E. You're doing 5 years, right? Okay. It's that simple and that hard. You're going to talk about how you've applied some of the assumptions to different values. You're going to tell a story with as much detail, maybe more, as some of the other stories you told. You're going to be helping them walk through what you did and how you did it. And then you're going to give us a picture. What image are you going to show now? What are you going to copy and paste? The projections. So the projected or forecast income statement or balance sheet, or possibly balance sheet and income statement. Again, the order is up to you. Just be consistent in your order. Make sure that when you put these in, that they are large, when you bring them into your document, they're large enough that they can be read, which in some cases means you're going to have to switch from portrait to landscape in different places, right? And be prepared to do that. But if I'm now going through and providing my projected income statement, I'm going to go through and I'm going to hide the columns of the past because I already provided the columns of the past in my original historical documents. And once again, we're literally just going to go through and copy and paste this puppy. And I would point out the highlights here. Notice what's happening to EBIT. It's going from $100,000 to almost $300,000. Notice what's happening to taxes. They go from barely $24,000 to $87,000. Just point out some of the highlights. Give them enough context. So once they've read your narrative about this, and these narratives don't have to be a page, they ought to be a paragraph or maybe 2, right? These are not big, expansive narratives. They lead the reader, whomever that might be, to the numbers and help them understand what those numbers represent and where they came from. That's what we're doing here. Shockingly, then, we're going to have a narrative. What are we going to talk about this time? What's left? There's only one thing left. What is the whole outcome of this part of the plan? Pardon me? We're analyzing the whole time. Cash flow. Cash flow. This is a cash flow projection, right? So think about this. We began with the historical financials and we worked on those to get them to a point where they were manageable enough for us to analyze them. We then did some of that analysis and we constructed a series of assumptions. From the series of assumptions, we were then able to apply them to the historical financials, and we then created the projected income statement and balance sheet, or forecast income statements and balance sheets. Now that we forecast the income statement and balance sheet, now we're prepared to forecast the cash flow statement. There's a couple of things that I absolutely want represented in this part. So the narrative is going to be about cash flow. There are 3 things about cash flow you absolutely must point out. The company's cash flow is a function of their cash flow from operations, the cash flow from investing, and the cash flow from financing. And that then results in the company's overall cash flow or its change in cash. I want you to describe what cash flow from operations is. You can literally look at it. And you're right here, we've got exactly what it is. We know cash flow from operations is a function of net income, adding back depreciation, and then considering the working capital items. Discuss that. Describe it. Help them understand this. At the point that you write this, you will understand it relatively well. You're already beginning to understand it well. I've only put you through these pages 3 or 4 times, right? You're going to go through them by the time we're done 6 or 7. So describe how cash flow is being generated or how it's constructed. Describe cash flow from investing. Remind me what cash flow from investing is. What is an investment for a company like Lauren's or Chase's or anybody else's? What's an investment? Is it stocks, bonds, and mutual funds? What do you think? Please.
For our company, we are with someone who has a coffee company,
Uh-huh.
and so she's investing in roasting her own beans, so she's gonna cut out that cost.
Primarily fixed assets or equipment that either A, help us create more revenue, or B, help us save on some expenses. Either way, we're creating net income and profit, right? So companies invest in assets that help them create revenue or save on expenses. If you have an investment company, so Sov's broker-dealer, that's an investment company, it might have in inventory some stocks, bonds, and mutual funds. That's not the kind of investment we're talking. If Justin's company, which let's say is a transportation company, if it's got excess cash on the balance sheet that's earning what, 0.nothing%, right? Then he may say, I would rather that cash be put together, put in someplace where it's more productive. Maybe I'll invest in some stocks, bonds, or mutual funds with it, but he's not doing it as an investment for the company. He's doing it as a substitute for cash that he thinks is going to give him a better yield. That's not the kind of investing we're talking about when we look at cash flow from investments. And cash flow from investments literally and simply is the change in gross fixed assets. Some of you know this is called CapEx. Some of you know it as net capital spending. It's the change in the gross fixed assets or the money they spent in any given period of time on new investments for the company. And then cash flow from financing. Remind me what the financing elements are. There's essentially 3 of them. You've gone through and done this already. You should know this. Renee, what are some of the financing elements? Debt, loans. Okay, we finance our company in part by borrowing money from others. That's one. What's another one? So how do we capitalize the company? Equity is the next one, so paid in capital, right? And sometimes to our debt stakeholders and more likely to our equity stakeholders, we will distribute out some of our profits. So money coming in as new debt is a positive cash flow item, right? But we owe more, but it came into us as cash. Money coming in, Justin puts $100,000 into my company, he buys into my equity account, he becomes an equity stakeholder, that's a positive cash flow. I pay off some of my debt, it's a negative cash flow. Justin now, a couple of years later, sees we're profitable, he wants some distributions, he wants a $50,000 distribution along with the other equity stakeholders, that's a negative cash flow item. Those are the cash flow from financing items. No differently than what you've got right here. In fact, all you really have to do for this is look at the cash flow statement. This was the first part, operations. This is investments. This is financing. Tell them this, because if cash flow was not necessarily immediately intuitive for you, it is meaningfully less so for these business owners and or possibly others that will read this plan. Now, I'm not naive and you shouldn't be either. How many people are for sure going to read these business plans? One? Who? Me. One. Yeah. Okay. Now I'm hoping that the business owners read them. There's a pretty good chance. I've talked a lot with business owners after we've done these things. Most of them do. That might be 2 or 3. You've read them. We're expanding this. But we're not gonna be naive and thinking that everybody in the world's gonna see these, are gonna get into their key employees, their vendors, et cetera, but some of them will. I'm not interested in who reads this one. I'm interested in you being able to construct and prepare things so that people can read them that make sense. Because it's not this one that's a big deal to you. It's when you have to do a proposal 5 years from now for a major aspect of the company you're working with, where you're looking to get from Cecilia another $50,000 in funding. Okay, and I want it to make sense. Or worse, when we lease $500,000 in funding, right? So with that, you're going to describe how we applied the assumptions to get to the projected statements and how I went from those projected statements through this process to get to the cash flow statements. And then you're going to copy and paste, just like we have in every place else, the image from the cash flow statement. You're then going to offer some conclusion. And notice that this is a separate conclusion from the one that you're offering at the end of the whole plan. But to be honest with you, this conclusion is just a line before your major conclusion. This is a bit of a financial conclusion. And the financial conclusion is that through all of this, we project cash flows or changes in cash balances of X, Y, Z for these particular years. You might even here go ahead and suggest with these cash balances, if they're nicely positive, they can think about reinvestment, they can think about distribution, they can think about paying off debt, they can think about expansion, they can think of all kinds of things. Or if some of them are negative balances, they have to think about where they're going to find the cash in order to backstop those negative balances. Because it's all well and good for us to show it's negative $50,000 in the cash account. That just seems like digits on a page, right? Sage, what happens when we have negative $50,000 in your checking account? No bueno, right?
Yeah.
In fact, my guess is it was negative 50,000 in your checking account. It would be worse than no bueno. It would be a nuclear, okay? Maybe in your checking account, it's negative $5. That's no bueno. But for a business, it's no different. You've got to find some way to backstop it, to backfill it. Either to get a bank to hold off and not, to take out the nuclear option, or to get some money from somebody else or borrow or whatever it happens to be. Businesses have to do the same thing. So when you show that they're running either really low on cash, maybe it's less than 1% or less than 3% or whatever of their revenue, then they probably need to go out and find some additional cash. But they're running the risk of having a real problem. I want you to think of cash as the lubrication in the engine that is the business. We put oil into engines so that the crankshaft pistons are all moving nicely. If without the oil, without the cash, it seizes up. A business seizes up without cash. It can't continue to operate. Employees leave, landlords lock the doors, IRS comes, whatever happens, they seize up. Okay? So you get some conclusion here. I'm going to say here, stop short of offering opinion. Tell them here are some of the things you can consider doing, or here are some of the things you might need to do with these particular cash balances. You're going to go back a couple pages here. Going too far. And now you're going to give your conclusion really. We've already talked about that. And then you give all your appendices. Any questions about the flow and structure of this deal? Has it been helpful to walk through it? Okay, so because I am not necessarily going to expect that you retain everything I talk about here. In fact, I'm just smart enough to know that you don't retain everything. Not only have you noticed that I'm recording this today, and I'll post the recording out to you, but I also, and the recording for the day is everything we've talked about, everything. But I also have in your structuring the financial section of the business plan, I've got a couple of videos linked for you here one of them's like 6.5 minutes, so they're not really long, that walk you through the structuring of the financial part, which was a subset of what we've done completely. Okay? I expect when I see your plans that this flow and structure has been followed. And I've given you a lot of latitude in everything but the financial plan. I haven't given you a lot of latitude in the financial plan. I've told you pretty much, do this, do this, do this. So I expect to see this, and this, not that and the other, okay? This is not where you exercise creativity. You can do that a little bit, your conclusions. You can clearly do it in the marketing material and some of the other parts of the plan, not in the financial part. Any questions? Good. Why are you still here? We're clear. I know we're kind of early, but you guys have plenty of work to do, right? Yeah, I want to be fair enough? Okay.
Thank you.
Thank you. Celia and Elise. Come talk to me about Isha. Yeah, that's what I was afraid you were gonna say. You don't have to justify. You've already done. Oh, okay. Saying, no, that's why you don't have to justify this. I know that you have done what you need to do. So we have a couple of choices, and I want you to help make the choice. We can have you continue to be tasked to and to get as far as we can with this, which may not be much fruit we would want. I don't like the fun. I don't think you do either. You have quite a bit of information, but not enough to carry much. Or we can keep harassing and cajoling her, and maybe she'll do something, and maybe she won't. Or I can split you up and have one of you work with another team that maybe could use a little help, and somebody else. Be perfectly. The one of those options I'd rather not do is harassing people because my boss. It's an exercise in futility. You won't like it. She won't like it. That's that one I just took off. But the other two options, I don't care. I want you guys to think that. Now, if I assign you to work with a couple of others, I could easily do that. I don't know who they would be immediately, but it would be in this class. It would be the other class. And there are some that certainly could use some additional help. That might be fulfilling to you, it might not. If you want to continue to put together as much as you possibly can with everything you've got, then I'm gonna expect something creative and robust and meaningful. But I'm gonna recognize you got something. So I'm gonna let you think about that. You don't have to answer the question right now. But within the next couple of days, come back to me and say, we would like to follow you. Okay. Honestly, I don't care what you do. It's creative. If you have questions for me, it will help inform your decision. Ask the questions, an email, text, like that, whatever it has to be for my office. I want it to be able to do it. And I want you to understand why. Well, it's not just I'm trying to be a nice guy. You've met me, and I'm not necessarily a nice guy, right? But in business, if you're going to be held accountable, you should be given the opportunity. You gotta be accountable. You gotta have something. Otherwise, I'm holding you accountable to something completely foreign outside.
Yeah, if we were to stick with Tanisha and we haven't received any financials from her, how should we do the financial?
Well, we can't do it. And that's why I say I'll recognize our limitations. Now, I don't like that.
Yeah.
Because neither of you are accounting or finance majors, right? Okay. You clearly have been able to tell by now. One of my goals is to make sure that marketing management and other majors walk out of this experience knowing more about the financial elements they want to do. And simultaneously, guys like Chase and some of these other Simon who are finance geeks walk out with a better marketing research. Because you're not getting
simply a management department, you're being a business degree focused on management marketing. So not being able to do this financial part, and which means also not being able to do some of the other kind of financial or actual assignments, makes that really hard.
Yes.
In which case I have to think about what can I give you that would let you now do some of those. But if that's the decision you make, I will find a way to give you some things so you can fulfill some of those. But it's gonna be up to you. I would probably make one more attempt. Here's how I think the attempt. You've met her, right?
Yeah. On Zoom.
Yeah, sure.
several times, yeah.
Kind,
Yeah.
positive,
Yeah.
fun, delightful, optimistic. I would play to her emotion. You know where her shop is? You got the address.
Yeah, we got the address.
I would literally set it, try to go visit her. Go and see. Rick, my style, that's what you've met, you know this. And we're in deep trouble. Help us understand why. Notice I didn't say, will you please give us the financials? You already know that she's not giving it to you, you need to understand why. My guess is a reason, I don't know what that reason is.
I bet when I'm colder, it was a little bit colder than the other times.
Yeah.
Because she knows, I mean, the defenses start to go up, right? You know, when your coach asks you why you haven't done this, this, and this, you know, for a while, you start to try to bluff the coach, and after a while, you realize, well, I can't keep doing that. That's where we're at. Appeal to the human being. Maybe that will help you, maybe it won't, but you will know you've done everything you can. And then when you do this write-up, you're gonna have to talk about it. Get these things, that becomes part of the plan, by the way. Client doesn't have it. That's a problem, that's a concern. Your conclusion, where you give some opinions, call it like it is. Talk about those things. That can be stinging, even when you use nice words. And the lesson learned. Now, I apologize for you guys being in this situation. No, it's really not. So thank you for saying that. Everybody else, I had their financials before I signed it off. I thought I had the financials, and I overlooked it. All right, good.
Yes,
When the
thank
next
you.
couple of days come back.
Okay.
Okay.
I do have a quick question,
Yeah.
not regarding this, but the talk about business, I
Yeah.
think that's this Friday. Is that mandatory?
No, it's an extra credit.
Okay, it's extra credit, okay.
Yeah,
I
it's
just-
it's a source of meaning, like credit.
Okay. Okay, I just have a lacrosse game, so I can't make it, but I just wanna make sure I have something to see.
Nope.
Okay, perfect, thank you.
You know, now that you've asked the question like that, I want to look at something real quick just to make sure I'm not telling you something incorrect. I'm like 99% sure.
Thank you. I read it.
Yeah, so it's extra credit. So if you look at the different sections of your assignments, they add up to 105%, with this being up to 5%.
Okay.
Yeah, so that's, it means that's.
Okay. Thank you so much. Thank you.
Yeah. Yep, I'll be right there.